Hey everybody, it's Josh Alexander, and on today's episode, we're going to be talking with Dino, the broker and owner of California Coastal Loans, and we're going to be discussing what a buyer should be looking for when choosing a lender. So whether it's your first time purchasing a home, or you've done this before but you just weren't really happy with the lender you chose last time, let's look at some of the things you could be doing, not only to be asking the right questions, but also to make sure you have all the paperwork together that you need to make the process as quick and as seamless as possible so you can get yourself ready to purchase your home. So let's get into it. Hey Dino, welcome and thanks for joining us today. So as you know, one of the most important things when you're purchasing a home with a loan is to have the right lender that's working by your side, because not only are they important before escrow, but during escrow and at the close of escrow as well. If you don't have that right person, there's a bunch of problems that you can run into. So the first question that I really have for you today is, how do you go about choosing the right lender, and what type of things you should be looking for when you go and start this process of finding a lender before you purchase a home?
Yeah, so that's a really good question, Josh. I mean, there's a lot of different lenders out there. At the end of the day, for the most part, we all have access to the same products, the same different banks. So there's a lot of similarities between all the different lenders out there. However, when you're dealing with somebody and you're dealing with somebody in this kind of capacity where you're borrowing a ton of money and you're qualifying for something, it has to be done right the first time. So in my opinion, what you should look for is really two things up front. First one is personality. And what I mean by that is, do you guys mesh? Because if you don't, it's going to be a problem the whole way through. So make sure you pick somebody that you can communicate properly with, and somebody that's willing to listen to you, not just talk to you. And there's a big difference there, because you're buying a home. It's a big deal. It's not a car. It's not clothes. It's not anything. It's a home, and it's a large dollar amount. So find somebody that's willing to listen to you so they know exactly what your needs are and what's important to you. So that's the first and foremost, right? The second thing is, you want to find somebody that's competent, because this industry is not easy. There are a ton of pitfalls that one can fall into every step of the way. And in the beginning stage, when you're pre-qualifying with somebody, it's really not that big of a deal. But once you're in escrow, now you got money on the table, you got dates and timelines that have to be met. Those are things that you can't be fooling around with. So you got to be dealing with somebody who's totally competent and able to carry out those obligations that you've committed to per contract. So those are the two main things. As far as interest rate and cost goes, so obviously both very important. And all I can say is, shop it. Don't be afraid to shop it, but do yourself a favor. Don't talk to any of don't go to Bankrate and NerdWallet and all these places online. The banks that advertise there, that pop up on there, they're what we call low price leaders, right? They're doing it because it's the only way they can get somebody to call them. And quite honestly, I don't really trust them. I've known people that have worked at places like that, and they come right out and say, look, we have to start by offering this incredibly low rate at an incredibly no cost type of a deal. But then it's unfeasible to actually finish it that way. So what they do is they try flipping it on you down the road. And I've heard that horror story one too many times. So first thing I do is say, don't go to online lenders. Some of the big ones, that's fine. That's a little different, but these no-name ones, literally the other day, somebody said they couldn't remember the name, but they knew that the word monkey was in it. And I was like, well, that's your first time. Monkey lending is not the right place for you to go. And again, don't go over the top. Talk to 2 or 3 different lenders. If you trust one, or you just trust them, your insides tell you this is a good guy, go with that person. Because down the road, when you're finally in escrow and things do start to change, you don't want somebody who's going to all of a sudden say, oh, this is the rate. Because when you don't even have a house, it's easy to say your rate is 2.5%. Because quite honestly, nobody can hold you to it because you don't even have a house yet. But once you get into the house and you're all the way down the road with them, it's hard to backtrack at that point. And for you to go find another lender, because you're, again, under timelines now. And then they give you whatever they feel is fair at the time, and that's how they make their money. So if you go with somebody from the beginning that you trust, I don't think you're going to have those kind of problems. And as far as the cost goes, I can tell you this right now, give or take probably $500. That's it. That's the difference in cost between all the lenders. If you try paying points and all that, it's a different story, but that's a simple, if you're paying points, you're buying down the interest rate. If you just go with like what we call a par rate, you got underwriting fees and processing fees and appraisal fees, credit report fees, all of that stuff. The most it varies is $500. All the rest is exactly the same. Your title insurance and your escrow and your appraisal and your county recording fees and insurances and taxes and all that. It's going to be exactly the same no matter which lender you choose. So don't get caught up on the fees all that much. It's going to be the same. The interest rate is important, but the trust factor, the competency factor are super important.
Yeah, and I've seen that same thing in terms of the lenders that I've dealt with too. And one of the big things I always tell my buyers looking to purchase is make sure you're actually talking to someone, having those conversations, and not just clicking buttons online like you were saying the same thing. A lot of people just are looking for that low rate. They don't know who they're working with until after they've already started escrow process. You want to make sure, one, that you're talking to someone that's competent. So talking to them on the phone, in person, however you need to do it, video chat nowadays with everything going on, and figuring out, like you said, if you work with them well, you can get along with them, but also that you're asking questions, they're answering them. And then one big thing I find as well, especially for first-time home buyers, you want to make sure that you have someone that's going to take the time to sit down and actually explain the process to you, because this is a big purchase, the biggest purchase most people will ever make. And one of the things that you can really get into trouble with is if you don't understand what the lender's talking about and they're not taking time to really go over everything in a detailed way that makes sense to you, that's where you start having issues during escrow. And that's the last place you want to have issues, because you can't really do anything at that point. Like you said, I mean, once you're already halfway through escrow, to try to switch a lender at that point is very difficult. And the chances of you falling out of escrow are much higher if you have to do that.
Absolutely. The other thing, Josh, I was going to say is oftentimes, especially in this market, you have to be super aggressive in order to get your offer accepted, right? Unless you have 800 credit scores and you're putting 20 or more % down, you might not get the property. You might not get your offer accepted because there's so many people making offers right now. So the best offer isn't always the one with the highest, offer price, right? That's what everybody thinks. Well, whoever offers the most gets the house. There's so much more to it than that. We just got an offer accepted today. There was actually 3 offers on the table. Both of the other offers were higher than ours, but ours got accepted strictly because of the fact that it was the best offer. And what I mean by that is we were capable of closing in less than 30 days, number one, which is huge. The second piece is there's all these contingencies that, I don't know how much you've gone over with all the listeners on your show, but at the end of the day, there's a 21-day loan contingency period. There's a 17-day home inspection and appraisal contingency period. And quite honestly, if you have a 30-day close of escrow and you have a 21-day loan contingency period, you have 21 days to have something go wrong, as far as I'm concerned. And here's how I look at it. If you have a pre-approval letter and you're out making offers and you need 21 days to have a loan contingency, I don't get it. It's like, are you not approved? Because if you were approved, you shouldn't need any days at all. So what we do at California Coastal Loans is we make it, most of the time, we just make it a 0 loan contingency up front, or sometimes if it's a tougher deal, we might say 10 days. But you don't need to go in at the full 21 days. If you're truly done and you've done a good job and you've picked a good lender, you should be able to, reduce that to very little or 0. And that makes you a much better offer on the table. And Josh, just from being in the business, and doing all the deals you have, if you can't get a healthier offer on the table, if you only got 5 or 10% down, chances are you're not going to get an offer accepted, right? And then the home inspection and the appraisal, amateurs need 17 days to get it done. Professionals don't. You should be able to get it done in 10 days or less. And now, the other thing aside from the lender is you need a competent agent. And it amazes me how many agents don't understand this policy. Like, shorten up these contingencies and work your tail off to get them done. And if you want to get your client into a house. So anyways.
Yeah, no, same thing. I talked about this last episode. Well, is there's a lot of ways to make a contract and an offer look better than anybody else's. That has nothing to do with the purchase price, and the lender has a big role in that because they have a lot of the contingencies, especially the longer ones that really the seller's always worried about because they can't lock you down to purchase the house until 3 weeks into escrow, and at that time, if something happens, I mean, who knows where the market's going to be at, especially in how fast everything's moving right now. So it's important to
Yeah.
have a lender that can get it done quickly, can get it done on time when they need to get it done, and are very responsive and are always communicating. That's something else I always find helpful is when you have a lender that's actually telling you what's going on, what the next steps are, where they are in the process. There's never any questions on what's going on with the transaction. So on that note, there's another question that I get often with a lot of people that are starting the process, looking to buy their first home or a home in general, and they don't really know when to reach out to the lender in terms of talking to them, but also they don't know what they need and what they need to gather before they talk to a lender. So especially right now with the market moving how quickly it is, it's important that they have everything together quickly. So when they talk to a lender, they can send over whatever paperwork they need, get that pre-approval going, and that way they have the best chance of securing the home that they're looking at, especially if they're going about it the wrong way, which unfortunately some buyers do, where they're kind of looking at properties and then they go get the pre-approval. If you're doing it the right way, you're getting that pre-approval first, and that requires some paperwork. So I just wanted to have you go over what the paperwork they should have ready to send to you before they talk to you, just to make the whole process smoother and a little bit faster for them.
Yeah, for sure. So the general items that we need: 30 days worth of pay stubs, last 2 years of tax returns, last 2 years of W-2s, 2 months worth of bank statements, wherever you're pulling money from in order to do the down payment. Picture of your driver's license, and if you own any other property, mortgage statement, insurance statement on any of those other properties. If you've recently been divorced, some sort of a divorce decree, something like that. If you are collecting Social Security or any kind of a pension, you're going to need the awards letter that shows how much you get for the upcoming year, which is the year that we're in. So you always get your 1099 for the previous, then you get your awards letter that shows what you're getting in the new year. So that's pretty much it. Now, with that said, I always like to talk to the client in the very beginning instead of doing the button clicking, because there's too many things that can be and should be said during that initial conversation that if they're missed, it sets the tone the whole way through, and there's going to be things that go wrong. So during that time, and I find out what they do for a living, whether they're self-employed or 1099 or W-2'd, that kind of stuff. Sometimes what I do is I take away from that, right? So oftentimes we don't need tax returns and W-2s for 2 years. Sometimes we only need pay stubs and one W-2. And oftentimes I like to ask for everything, just because it gives me kind of like that overall knowledge of everything. And then if I can take away, then I take away before I send it to the underwriter. But it's always best to have all that stuff ready for your lender. And then from there, the lender can decide what goes in and what doesn't. But for the most part, know your numbers. When a lender says, what do you do for a living? You should be able to answer that. But I can't begin to tell you how many times I ask people how much money they make, and they don't know the answer to that. So that's one of the key questions that are asked that you need to know the answer to. And I'll go one step further. If you are any kind of a bonus or commission type income, know your breakout, know what your base is, know what your commission is, know what your overtime is. It's super important, because we can use 100% of your base salary, but we can't use 100% of your bonus and overtime or commission. We have to average those over a 2-year period. So if, for example, you made $2,000 last year in overtime, and this year you only made $1,000, believe it or not, because it's declining, we can only use the $1,000. However, if you made, let's say, $2,000 the previous year and $3,000 the current year, then we have to take the $5,000 and divide it by 24. So then it's averaged out. So that's the general rule of thumb.
Got it. And then another question on top of that. So a lot of people self-employed are wondering what they need, if it's any different, because obviously they're not going to have a lot of those documents that you're talking about on there. So can you just go over briefly, and this is not going to apply to everybody in every case, like kind of like you were saying, but some of the general things that someone that self-employed is going to need to have available to you so you can get the process started?
Yeah, so self-employed people are the best and the worst. They never know how much they make because they try so hard to make it look like they're not making any money. But same general rule of thumb, right? I mean, depending on how you're structured, if you have a corporation, then you should be W-2ing yourself a portion, and you should be K-1ing yourself the other portion. So you got to know what that is. So business tax returns, right? If you're an LLC or a corporation, there's a corporate basically tax return. You're going to need 2 years of that. And hopefully you're W-2ing yourself or payrolling yourself. If you're not, then no big deal. We can still make all that work. But if you're self-employed, because of COVID right now, there's been a couple new additions that have been added. So if you have not done your 2019 tax returns yet, you will have to now get a P&L for your 2019 and a P&L, which stands for profit and loss, for your year to date of your 2020. So here's the thing with that, right? It can be, because of COVID, a lot of this stuff changed recently. It can be a self-prepared P&L. So you can just whip up a P&L that says you made $200,000 and you paid out X amount, and now you're netting 150. And that was okay, except for because of COVID, they don't really want to believe you. They want you to prove it. So basically, if it's self-prepared, you have to also provide bank statements that show during these past few months you've actually been achieving those kind of sales. If you were in retail, for example, and you gave out this number, but you showed zero because you were closed for the last 3 months, well, that's not going to work. Yeah. So there's 2 ways of doing it. That's the self-prepared way, or if you have a great CPA, then if it's a CPA prepared P&L statement, then they'll take it for gospel and they won't make you prove it.
Got it. Okay, perfect. And then one other question, let me pull it up right here real quick, that I do get a lot, and it's something that a lot of people are really unclear of, is especially with you being a mortgage broker, can you kind of just go over what the difference and what maybe advantages, and if there are any disadvantages of working with a mortgage broker versus just a standard lender when you're trying to purchase a home?
So every buddy, depending on which side of the fence you sit on, has their little standard answer when somebody asks that question. So I laugh a little bit because I've sat on both sides, and I'm on the broker side now, and I love the broker side. It's significantly better as far as I'm concerned, and it is, in my opinion, this is what I say all the time, but I do believe it, is I have all of these different banks that we sell loans to. And because of that, we're not employed by them. So we're not obligated to give them the loans. Plus, if they, for whatever reason, don't have good rates, I'm not stuck giving loans to them. I can give it to anybody. And what I like about that is on the wholesale side, which is where I deal, on the broker side, the lender itself, they're kind of like, I like to say they're having to stay honest, because if they decide to raise their rates just for a little bit, right? Whether they want profit sharing or they want to slow things down or whatever it is they want to do, they run the risk of us saying, well, I'm being forced to go to this other bank now. And guess what? They're not so bad. I liked it over there. So I'm not going to give you loans anymore. I'm going to stay over here. Or if they keep playing with numbers too often, then it's like, we don't trust you anymore. And we're going to start going over here. So they know that they could lose us in a heartbeat. So in my opinion, the competition level is significantly higher, and that's what makes brokers so much better. That's my personal opinion on that. The other piece that not everybody will agree with, and for all the guys listening that are on the other side, I'm sorry. There are some really good lenders that sit on the other side, but for the most part, I always like to say when you show up to work every day, and all you got to do is wait for the phone to ring, you're not sharpening your skills per se. You're just showing up and you're waiting for that phone to ring. And here's how that works. Mr. and Mrs. Buyer, you have significant problems, and I don't have time to work it out because I'm going to miss other calls. So I'm sorry, you're denied. Boom, and then they go on to their other calls. That's how I look at it, because they're going to lose money if they spend too much time with you. On our side, we have to hunt every single day for our food, and if we have a problem, we fix it. And that's because our skills have been sharpened over the years, right? Because our phone doesn't just ring. We have to make our phone ring. The way we make our phone ring is we have to do a great job, not a good job, but a great job for our clients. And that's how we get a referral from them. That's how we get referrals from real estate agents. Real estate agents want that deal to close. Their name's on the line, their commission's on the line, their client's family and everything is on the line. So when they refer an agent to you, a loan officer, for the most part, I consider that pretty valuable because they have enough confidence in that loan officer that it's going to get done. All right. So that's a good source if you're looking for a lender, is to start with your agent, because they wouldn't be handing you off to somebody that they wouldn't trust that can get the deal done.
Yeah, agreed. Most agents will have a few select people they work with, and that's really because they trust them. And during escrow, if there's a problem, they know that they're going to do everything they can to fix it and make sure it gets done correctly. So that way there's not any future issues with not only that client, but again, making sure that confidence stays high for any future clients to make sure that you're comfortable referring a business. So that is something to look at. Anything else you can think of in terms of the lending side of things? What buyers, especially this might be geared towards maybe first-time buyers, that really they should know before talking to a lender or while they're talking to a lender, and kind of before they start the whole process of actually getting into escrow? From the lending side, is there anything else that you can think of that good for them to know, really understand before?
I can't begin to express how important it is to actually start this process way before you're interested in actually buying the house. Like, one of the most important things, I'll give you an example. Talked to somebody recently where they thought everything was great, never missed a payment in their life, had good credit, all this other stuff. Well, guess what? They had a $54 medical collection account that popped up that they had no idea was there. And it's just because their insurance didn't cover one of the medical bills and there was $54 left in it. They didn't know about it. And just like that, they got this collection account. Their credit score dropped like 80 points because of it. Wow. I can still get them a loan, but it's not going to be as good of a loan. Now, a lot of lenders will look at that and say, yep, you qualify, here's your approval letter, go out shopping. Guys like myself and people that work at our company and other high-end, mortgage brokers, they look at it and say, wait a minute, something doesn't look right here. You've had perfect credit your entire life, and now you got a $54 collection account, right? So let's work on it. Keep in mind, if you're already in escrow, well, you did exactly what Josh said not to do early on, and you went out and started looking for houses before you were pre-approved. Now you're kind of stuck, right? Versus if you actually started this process ahead of time, and everybody's so worried about their credit score, their credit report being ran, and they think that it drops it like 30 points or something. It doesn't even drop your score. It might drop it 1 point, like literally, it's not a big deal. What hurts it is if you have everybody under the sun trying to run your credit, then it'll get hurt. But pick somebody, run it, know where you stand, and also know that a credit report on Credit Karma or any one of those online accounts is different than what we run. What we run, it's a whole different algorithm, and it's much harder, like it's more stringent of guidelines. The algorithm is because you're buying a house. You're not applying for a credit card, you're buying a house. So the algorithm is different, your credit score is different, and it's usually always lower because of that. So we need to know what it is. Now, here's what another good loan officer will do. Let's say you have good credit. Let's say you have a 730, 738 credit score. In all rights, it's a A credit. But did you know it's 2 points away from getting a much better loan? Not much better, but a better loan, right? Let's say you're only putting down 10% and your PMI for 738 might be like $115, depending on your loan amount, right? Let's say $115. You get your score up by 2 points and you hit that 740, guess what? That PMI might drop to like $48, just like that. That's a savings for 2 points. But how do you get your score? How do you know where you're at, and how do you get your score up? That's a good loan officer that guides you through that process and gets you to where you need to be. So when you are ready to buy a house and make an offer, you don't have these kind of delays, you don't have these kind of issues, and you get the absolute best loan that's available for you.
Yeah, it's a long-term relationship you need to have with your lender. The longer you can do it, the better. Because I mean, I have clients talking to lenders even a year before they're ready to buy, because like you said, having that really in-depth run of your credit score, knowing what you need to fix and what is the best thing to do, because sometimes it might be better to pay down some of your debt. Sometimes it might be better to do something else. To know what's going to be best for you and to develop a plan on how to get you the best rate when you are ready is also extremely important. So people that are on the fence of, okay, I'm going to buy, I'm not exactly sure when, but I'm going to buy at some point in the next 6 months to 12 months, hopefully. There's no reason not to talk to a lender, to have them start looking at those numbers for you, because you might be able to get, like Dina was saying, a much better in terms of overall payment, a lower payment, or just better rates. And just in general, you're going to have that really dialed in by the time you are purchasing a home. You're already going to know what you need to do. You've already been doing it for the last couple of months, trying to get your score as high as you can, paying off credit cards, increasing your down payment, whatever you need to do, so you're in the best position possible. So when you do start getting those offers placed and going into escrow, you know that you're getting the best rate you can, and you're not leaving anything on the table by rushing into it and maybe not waiting a month or two because you just don't have the time anymore. So it's always good to contact them sooner rather than later. And I say this all the time, but lenders don't charge you to talk to them. So they're not going to get you on the phone and say, hey, give me $100. We'll set up a 30-minute meeting. They're going to talk to you, run your information, give you advice if you're not ready to buy yet, what you should be doing to give yourself a heads up when you are ready to purchase. And that way you're basically ready to go, have all the information you need. And it's a great way to start building that relationship with your lender too. So it's something to be said. You need to know the lender you're working with. The more time you spend with them, the more time you're going to get to know them and really know that's the right person to work with. So Dino, I really appreciate your time. All this information has been super informative, and I hope this is helpful for a lot of those buyers out there in terms of what they need to be doing to get ready to purchase a home. What's the best way they can contact you if they have any questions, additional questions, or anything like that? I'll pop up your email up or anything else. I mean, email is probably the best way, I'm guessing, but any other way that you've been contacting you?
Great. My phone number is 949-720-1616. It's 949-720-1616. And our website is just CA, like California, coastalloans.com.
Perfect. And I'll put that in the show notes as well. So if you're interested, don't have time to write it down or in the car or something like that, I'll go ahead and link it down there so you have his contact information as well. So thanks again, Dino. This has been super helpful. I really appreciate you coming on, and I'm hoping to talk to you soon. If you found this podcast useful, please hit subscribe and leave a review below. I'd really appreciate it. And if you have any family or friends that want some more information about buying or selling a home, or just want to stay updated on the Orange County housing market, please share it with them. It'd mean the world to me. Thanks.